All right, ladies and gentlemen, welcome. Today we caught some beautiful clean trades with some serious profits. I mean, we caught these 3 trades. So we basically played ping pong with gold today, okay? And then we caught this short, and then from here we actually went long, and we caught about 7 to 8% or 7 to 8 risk to reward, I should say. And in this video, I'm going to explain to you guys what made us take the trades, what made us post the trade ideas, so that you can learn from today's trades and you can do the same thing by yourself on yourself. Okay, so what we want to do, we want to start with a top-down analysis. I'm starting with the daily and 4-hour time frame in order to know where exactly we're at in the chart. Okay, so the higher time frames are something like the map, the location where we're at. So just think of a higher time frame of the bird's eye view over a labyrinth. Okay, so the daily chart, okay, shows us the most significant support and resistance zones, the most significant support and demand zones on the chart. Okay, so what we discussed in our live analysis on Sunday inside our private community was the following. So we have a very strong supply zone over here at 4,550, and 4,550 at the same time is also a around psychological level. Okay, so right at these psychological numbers, we're gonna have a lot of trading volume and a lot of reactions and basically retest into those zones. So 4,550, when you look at the chart, I want you to just look at it as like a child, basically. Whatever seems obvious is most probably going to be our support and resistance. Okay, so right at this zone, we can see that a couple of candles, okay, wicked into it and rejected. So we have a couple of rejections from that specific area, which is why I chose to mark this area, because it's to me, it just seems very significant. Okay, just by intuition, my intuition tells me that if we come to this level, we're most probably going to see a rejection. Okay, we come to this level, we see a rejection, then we break, and then we come back, and probably what could happen is we could get rejection to the downside again. Okay, so that's very basic. That's the daily time frame. What I want to do then, I want to go down to the 4-hour time frame. The 4-hour time frame shows us that we've been moving up and down within a certain range. Okay, so this is our range over, this has been our range over the last couple of weeks. Okay, and what I want to do is, so we had our break of structure, our change of character, which is why we caught some beautiful trades over here with pretty high risk to rewards. Okay, 5 to 1, 8 to 1, and then here we caught another 10 to 1 risk to reward trades. I can actually show you guys in a minute how we post our trade ideas, and yeah, it's 100% transparent and legit. Okay, so if this is 10 to 1, it was actually posted before the trade was activated, and then it ran into 10 to 1 risk to reward. Okay, and then every couple times we'll have a loss as well. Okay, so it's just 100%. It can't get more transparent than that. So this was a win, this was a loss, this was a win, this was a win, this was a loss. All right, it technically wasn't a loss, it did go into profit. So at that point, I would just put my stop loss into break even so that I don't lose money on that single trade, because it has significantly moved into my intended direction. Okay, so the last couple of days, the last 2 weeks, I should say, actually, what we saw here was the following. So I'm expecting gold. Okay, so because this was the main impulse, right, I'm expecting gold to give me a 2-step correction back into this area over here. Okay, that's just how price works. Okay, price tends to give us a main impulse and then 2 or 3 corrections back into the discount zone. Okay, that's just smart money basics. If you want to get more information about that, join our free community. We have a whole entire 7-hour course there on smart money. It's for free, you can join it. Okay, what happened then was the following. What is significant with gold is gold tends to respect Fibonacci levels. Okay, so as you guys can see, this impulse retested this level, all right, and then at the same time, this was the Fibonacci level of 0.618. Okay, I can actually get my tool over here, and then you can see that at the pip almost, at the Fibonacci level of this impulse, we actually got a rejection, okay? And this level also at the same time was a very clear support and resistance zone, okay? So you guys can see that this zone was significant. We had several rejections from there, which to me tells me 4,660, which is again around psychological level. It's psychologically a significant price level, okay? And then whenever we have a break and retest, we typically get a rejection as well. So what we had over here was basically a confluence of two confirmations. One was that the fact that this was a support zone and then it was broken, was retested, and because it was broken, this now is probably going to function as a resistance zone, okay? That's one confirmation. The second confirmation for this short over here, okay, was what? Was the fact that this was also the Fibonacci level of this last impulse. Okay, so we have a confluence of two different confirmations. We have a 3 confirmation rule within our trading system. We don't share any trades unless we have 3 confirmations that are in confluence with each other. Because we have experienced, okay, that if we have 3 confirmations, 3 technical confirmations, the setup typically tends to be high probable. Okay, so again, number 1 confirmation, Fibonacci level of this impulse. Number 2 confirmation, retest of this area of the support resistance, or you could also call it supply demand zone, retest and then retest. So that's the second confirmation, Fibonacci level, support resistance. The third confirmation was we actually had an H4 engulfing candle over here. Okay, so this engulfing candle is basically my third confirmation that from here I want to sell. Okay, I want to sell. Unfortunately, as you guys can see, this setup was not activated. So what we did was basically we waited for a correction of this candle to the candle opening, but without actually activating our trade, it gave us the move that we were anticipating. Okay, but that's just going to happen, guys. You're going to have wonderful, beautiful, perfect setups, and they're not going to get activated. They're going to get wicked out. Okay, so a wick out would be something like this. So imagine we just entered here, we're wicked out, and then we get the anticipated move. Okay, that's just going to happen. There's no way around it. You're going to have the same experience. Okay, you're going to get wicked out, and then you're going to think, screw that. My analysis was 100% correct, but I was just wicked out for no apparent reason. That's just going to happen. Okay, good. What happened then? So we can see wonderful candle patterns over here. Okay, so for instance, we had a head and shoulders pattern over here. We actually talked about this on our Sunday call. And then we had a break, retest, and then the next move. Okay, the same thing. So this is basically a head and shoulders pattern. Shoulder, head, shoulder. What price then typically does is break this neckline over here. So this is called neckline. Okay, it breaks it, and then retest it, and then goes short. Okay, we have the exact same thing over here. So shoulder, head, shoulder, break, retest, boom. Okay, wonderful pattern, wonderful pattern. And then what we had here was, again, we had an H4. So this is our 4-hour time frame. This is our H4 chart. We had an engulfing at the end of an impulse, at the end of a trend move. Okay, our strategy which we call gold reversal sniper, is just based on this one single candle. Okay, but more about that in the course. You can watch it, it's for free. Okay, so we had another trade here, and then we had, I think we had a stop loss over here, but let's just go even more down. Okay, so this was a beautiful trade that we caught. This as well, this was a stop loss. So I was anticipating, all right, I thought that this was a 2-step correction, and I was thinking that price might give us a rejection here, but unfortunately price decided otherwise. Okay, that's just gonna happen, guys. Price, the markets don't care about your system, they don't care about your analysis. Okay, the markets just do. What you're supposed to do is try out the strategy, one specific strategy, over a long period of time, back tested it and then forward tested it, gather information and data, and actually build a proof of concept that the strategy is profitable in the long term. That's your whole job in trading, and nothing else. You don't have to be right every single time. It's actually impossible to be right every single time. Then what we had here was we actually had a break of structure and harmonic pattern over here in the lower time frame. So if we just switch to the 5-minute time frame, you're going to see that we had a pattern over here. We have an entire module on harmonic pattern inside the course. You can just go and watch it. Okay, so this is the pattern, and then this gave us a beautiful move to the upside that we caught clean. All right, then what happened today? Let's just focus on today. Okay, what I'm seeing here is that, so let's just go to the 4-hour time frame. Okay, so this was the, remember at the beginning where the daily support and resistance zones that the zone that we entered, the 4,550, that's that zone. So what I saw here, every single day I start with the higher time frame, the 4-hour time frame chart. What I see here is I had a clean impulse, and then I had a rejection over here. You see this small candle. This small candle is called doji. And then the next candle was actually an engulfing candle. This engulfing candle engulfed the previous doji, and it also gave us a huge wick that signifies to me that this zone is pretty much respected, and I can anticipate for price to actually go down. So that's the higher time frame. If you just come down to the lower time frame, you can see this here. So in the lower time frame, let's just go to the 15-minute time frame. I can see something similar to a head and shoulders. Tack, head. We actually did not have a shoulder, to be honest, to be fair. But then I just saw that this area over here was respected very much. So if you just go to the 30-minute time frame, you can see that this zone is very significant. So all you have to do is to see what the candles, what story the candles are telling you. We wicked into the zone. We have several wicks, more wicks. And then we had a retest to the zone, and then we had an engulfing, a 30-minute engulfing candle. So what I just did once we had our 30-minute engulfing candle was the following. I waited for small correction of this candle to the next psychological number, which to me is always the 5. So 35, 40, 45, 50, 55, 60. That's always going to be my entry when I'm looking for these scalp setups. Okay, what I did then was, so this was my entry, 4,535, 4,545 was going to be my stop loss. I actually gave it some space, like 20 to 30 pips for the trade in order to breathe, because what can always happen is it just wicks me out, right? And then gives the, so I don't want that. I want to be on the safer side. I want to catch a clean trade, and then I don't want to, with these scalping setups, I don't want to catch like 10 to 1, 15 to 1 risk to rewards. Okay, that's our gold reversal sniper and smart money strategy. We're going to focus on that in some other time. And then we can see that this actually gave us a beautiful move to the downside. And what happened then was the following. We see that we have a couple of rejections over here. We broke it, we came back. And then at the same time, we had a 30-minute engulfing candle over here as well. Do you see this candle? Perfect, right? So what I did then was the exact same thing. I looked for the next psychological number, which was 4,515. And then my stop loss was just 100 pips, which is $10. Okay, I don't want to make it too tight like this, because if I did that, I would have gotten stopped out. Do you see this? I want to give it some space to breathe. Okay, so this was 100 pips, $10. And then this gave us a clean 2.5 to 1 risk to reward. Okay, what happened then was the following, guys. Let's just go back. Let's actually see what happened here. So this is the 1-hour time frame. We can see that now this zone is being respected. Do you see this? So now this zone was being respected, and then what we had there in the 30-minute time frame, we had this engulfing, this bullish engulfing candle that signifies to me, that indicates to me that I can just wait for a small pullback and then I can go long. Okay, so this wick was just beautiful. It showed to me that this zone was being respected. We had a clear rejection over here, and then our third confirmation is the 30-minute engulfing candle. I just wait for a small pullback, right? So I want this candle, this engulfing candle, to be corrected back to the opening, and then boom. Okay, what is my entry? My entry was just the next psychological level, 4,505. Okay, my stop loss just 100 pips, 4,495. Okay, and this trade also gave us a beautiful move that we actually did capitalize on. Okay, so beautiful, guys. This is what I mean when I tell you always let the market come to you. Okay, always wait for the charts to give you what you want. I want a clear market structure. It has to be obvious. Like this, like you can't tell me that this zone over here is not obvious. It is pretty obvious, right? So we have an engulfing candle here. This is our engulfing candle. Then we have a second engulfing candle here, right? So we have tons and tons of rejections at this zone, right? Which makes that zone just significant to me, right? And then these candles in the 2-hour time frame is just the wick. That is an additional confirmation that this zone is being respected and we have a clear rejection. A wick is always a sign of a rejection. The same goes for this wick over here, okay? I can see that this zone now, 4,500, which is also around psychological level, is being respected, okay? Once that is being respected, I can wait for clear signs and indications of rejection in order to look for a setup. All right, guys, the chart is not going to give you always clean setups like this, which is why we're always saying quality over quantity, okay? You guys need to understand that basically, if you just catch one simple and clear trade like this in a whole month, you're most definitely going to be profitable, okay? If you just catch one-to-one risk to reward trades in a week or 2-to-1 risk to reward trades in a month, okay, that's gonna make you rich, guys, okay? You don't have to overcomplicate it. You don't have to take 5 trades in a day. You don't have to trade every single week even. If you make 2, 3, 4, 5, 6%, just imagine of how that could change your life. If you make 2%, 3% in a month consistently, that's just going to change your whole entire financial life within 6 months. You can just pass 3-4 challenges and then you're going to be $400, $500 funded, right? So you'll have $400, $500 capital at your disposal that you can trade with, okay? That could change so many things. That could just change your whole financial situation. You could just make, just with 2-3%, just make the calculation by yourself. 2% on 400K funded. It's basically $8,000, okay? That's good money for most people, okay? So quality over quantity. Take less trades, make them clean as hell, okay? It has to be obvious. All right. And then the more confirmations you have, if you have 3, 4, 5, 6 confirmations, our smart money strategy is based on 6 friggin' confirmations. Why do we do that? Because we want to do quality over quantity. Because I'm risking money on every single trade. I want to be on the safer side. I want to make that trade high probable. Okay. That's for today, guys. I hope you enjoyed this video. If you have questions, just comment below. If you want to join our community for free, the link is below. Let's go.